everyone. This will be our first of the classroom discussion. So before anything else, I hope we all continue to pray for the recovery of those affected by the COVID. And let's pray that this problem, or whatever this may be, will eventually go away and leave everyone in this planet so that we can continue our face-to-face discussions for you to be able to learn as well. Okay, so this one is just a recap of everything that we have discussed about the long-term construction contracts, which is our second topic for accounting for special transactions. So the first one was installment sales. This time it's long-term construction contracts. So there are additional things that I would also want to teach you here. So the main thing that we were concerned about long-term construction contract is how will we be able to record the gross profit? Because construction does not just take place within a year or less than a year. It usually takes place in more than 1 year, so 2 years or more. Usually the problems that we have solved, they involve 3 years or more, right? So in long-term construction contracts, there are different ways on how we will compute for the gross profit. So the first one is the completed contract method. This one I did not discuss this last time because I think this is already self-explanatory. If completed contract method, we will only record the gross profit if the contract is completed. Second is, I've mentioned this one before, the cost recovery method. This was even a bonus question last time during our quiz for long-term construction contracts. So in cost recovery method, we will consider the collections. Okay, we will consider the collections from the customer. So for example, we have a contract price of 100,000. So as long as the collections from the customers does not equal the 100,000 or does not exceed the 100,000, then we will not record the gross profit for that year. So for example, we have a contract price of 100,000. Say on the first year, we have collected from the customer 50,000. Are we going to record the gross profit from that time? No, not yet, because the 100,000 is not yet collected. So what if on the second year we already collected another 50,000? So a total of 100,000 total in collections. So by that time, once the collections would equal or exceed the contract price, that is the time that we will record our gross profit. So the gross profit in completed contract and cost recovery method is like the basic sales minus cost formula. The third one is the percentage of completion method. This one was discussed in detail last time, and this was even included in our quiz. So just for the recap, let's try this problem. Okay. So in this problem, we have Jaguar Enterprise obtaining a contract to construct a building. So it was estimated that it would take 3 years. 3 years. As in the given, we can see that we have 2009, 2010, and 2011. It is expected that it will be completed in 2011. So to complete the project, the expected cost is 200,000, while the contract price is 250,000. So now, let's focus here on the actual cost incurred, estimated cost to complete, billings on contracts, collections on contracts for the 3 years. So say for example, let's consider the completed cost contract. When will we record the gross profit for completed contract? So for 2019 and 2010, we will record 0 gross profit because the contract will be completed on 2011. So we will record only by then, when the contract is completed, we will record the gross profit. However, for the cost recovery method, again, it's about collections. So if it's collections, then let's focus here. Okay. How much is our contract price? It's 250,000. So in 2019, we have 120,000. So since it does not it is not equal to 250,000, then in 2019 our gross profit is zero. So let's now go to 2010. So in 2010, let's try to sum up how much is our collections. So we have 240,000 as collections, still not equivalent to our contract price. So when we go to 2011, we already have 250,000 as collections. So this time, the cost is now recovered. This time in 2011, we will now record for the gross profit. So again, for 2019 and 2010, gross profit will be zero. Okay, so let's now focus on the percentage of completion methods because this is the method which requires a lot of effort. It's easy, however, it's really taxing because there are a lot of steps. So I hope you still remember the pro forma formula for getting the percentage of completion method. Just going to write the year here, be easier for us. So first, we will get the contract price, which I've already highlighted in this part, the 250,000. So let's have the contract price. Since when we try to read the problem, there is no statement there that there was a change in the contract price. Because in some problems, you may see that there will be a change order, or it may say that on the second year, the contract price, say for example, increased to 5,000 or decreased 5,000. In this case, there was no statement to that effect, so meaning our contract price for the entire 3 years will be 250,000. Okay, let's try to copy this one so that it will be easier for us. Okay. Okay, now that we have the contract price, then let's focus now on the estimated cost. So first, let's check the cost incurred to date. So in cost incurred, we will use the actual cost. So let's put the cost incurred to date. So what again do we mean by cost incurred to date? It will be the accumulated or the cumulative cost. Meaning for 2019, our cost incurred to date will be only for 2019. However, for 2010, our cost incurred to date will be both for 2009 and 2010. And for 2011, it will be for 2009 up to 2011. I think I keep on saying 2019. Please disregard. I mean 2009, 2010, and 2011. Okay, so let's try to arrange. Since it's already here, let's try to put on our pro forma formula. So in 2019, we have 110,000. In 2010, since what is given for us in the problem is the actual cost incurred, it is per year. As you can see in 2011, it decreased, meaning it is only per year. And we need the cumulative. So we still have to add 110,000 plus 115,000. So we now have 225 as our cost incurred to date. So now let's go to 2011. We can just add the 2010 cost incurred to date to the 15,000 that is incurred in 2011. Okay, so now that we have the cost incurred to date, let's go to the next part, which is the estimated cost to complete. I think it's self-explanatory already, right? Estimated cost to complete. Kung pila ang kailangan para ma-complete. Pila ang cost na kailangan para ma-complete na to ang construction. So let's put it here. We have 100,000 for 2009. So we still need 100,000 in order to complete in 2009. For 2010, it's 20,000 and 0 for 2011. So if we try to analyze, why is it 0 for 2011? Because it is expected that in 2011, we already finished our construction. So next is
the total estimated cost. So how do we get the total estimated cost? So basically, it's just the cost incurred to date, then add the estimated cost to complete. So you add the two, this one and this one, get the total estimated cost. Okay. So again, we try to analyze the total estimated cost. It basically consists of all the costs that you have incurred up to today plus the estimated cost that is needed in order to complete the construction. So that would then be our total estimated cost. After that, we will get the estimated gross profit. So the estimated gross profit is like how we would get the gross profit if we have been given a normal regular sales transaction. Because in a normal regular sales transaction, we will get the gross profit by deducting the cost from the sales. So in this case, we will deduct the contract price and the total estimated cost. So let's try to get it. 40,000, 5,000, and 10,000. So now the question is, will we record the estimated gross profit as our gross profit for 2009, 2010, and 2011? The answer would be no, because we have to consider the percentage of completion. So what is then this percentage of completion? Basically, it's just the ratio of the cost incurred to date. So all the costs that we have incurred, its ratio as to the total estimated cost. So in 2019, our percentage of completion is 52%. So 52%, almost basically halfway. We are halfway through our construction. In 2010, we have 92%, which means that we are almost done. And in 2011, we have 100%, because in 2011, we are expecting already that we will complete the construction. So now we will get the gross profit. So the question is, the gross profit that we will get in multiplying the estimated gross profit by the percentage of completion will be the gross profit for the year or gross profit to date. So let's analyze. We are using the cost incurred to date. So what we will get here is the gross profit to date also. So we multiply the estimated gross profit by the percentage of completion, then that would be our gross profit to date. Now, how then do we get the gross profit for the year? We get the gross profit for the previous years. Gross profit for previous years. So in 2009, we just started the construction, meaning it is the beginning of the construction and it is the first year, meaning there is no previous year yet. So this will be 0 then. Then the gross profit for the year will be taken through the gross profit to date, and we will deduct the gross profit for the previous year. So we have 20,952 for 2009. Now let's do the same for 2010. What will now be the gross profit for previous years for 2010? The previous year for 2010 is 2009. So we will use this one. And we will deduct. So in 2010, our gross profit will be negative. So now let's go to 2011 and see if our gross profit will be negative or positive. So now the question is, how much will be our gross profit for the previous years? So since it says for the previous years, then we will use 2019 plus 2010. Or as you can see, the gross profit for previous years is equal to the gross profit to date here, because the 4,591, the gross profit is to date already, meaning it's the gross profit if we consider both 2009 and 2010. So it's okay if we directly copy the gross profit to date of 2010 to gross profit for previous years for 2011. But if you want to make sure, you can also add the 2009 and 2010, and just for checking that they will be the same or equal. Now let's get the gross profit for 2011, which is 5,408. So now if you are asked how much is the gross profit for 2009, 2010, and 2011, now we have the answer. So this is the one that was discussed before. Let's try to save. And then another question that may be asked in the exam would be, how much is the revenue to be recognized? Because we have a contract price of 250,000, it is not fair if we just divide the 250,000 for 3 years, because the completion is not really divided equally. So what happens is we use the contract price and we multiply it by the percentage of completion, which is logical because we have to match the contract price with the percentage of completion. How much is the completed part? So let's try the per year. 2011. Okay, the contract price is 250. Okay. In 2009, it's 52%. In 2010, it's 92%. And it's 100% for... Okay, let's get now. Okay. It is this simple. So revenue to be recognized, we can't really recognize immediately the 250,000 in 2009. It's not also fair if we just record 250,000 in 2011. So what is logical is we multiply the 250,000 by the percentage of completion. And that then will be our revenue to be recognized in every year. Okay, now that we are done with that, let's go to another one that could be asked, the construction in progress. The reason why I did not include this in the discussion is in order for us to get the balance of the construction in progress after the closing entry is through a journal entry. So it will be easier for us to get the balance if we use a T account. However, I will do the discussion for this one after the midterms exam. I'm not sure if I will be able to include this in the exam, but if ever I do, it will be a bonus question only. Okay, let's try. Always remember that in construction in progress, there are only two things that we will include. First, the cost incurred to date. Second would be the gross profit to date. Meaning, since we are getting the balance of the construction in process, the data that we will use would be to date or the cumulative, because we are getting the balance, meaning we are getting the up to date or the cumulative data. So let's try to get the per year. So in 2009, 2010, and 2011, it will be easier for us, especially if we've already computed for the gross profit. So for us, let's just copy the cost incurred to date. Again, be careful what the problem uses, because if the problem uses actual costs incurred, you have to add if it's already the second or the third year. If the problem says that the actual cost is already incurred to date, then you no longer have to add the per year, especially for the second and the third year. So in this case, let's go back to getting the construction in progress. We just copy the gross profit to date. Also, in this case, be careful with the gross profit to date and the gross profit per year, because you might copy the gross profit per year, which is very different. For example, in 2010, the gross profit to date is 4.5, while the gross profit for the year is negative 16. So it would create a very big difference. So now we will get the construction in progress. Let's just copy the heading. So the construction in progress would now be the total of the two components. So now we get that in 2011, it's 250,000. But usually the problem asks, what is the construction in progress after the closing entry? So let's analyze that statement that it is a construction in progress. In 2011, is our construction still in progress? I believe not. Because in 2011, we have already finished the construction. Meaning, the total cost incurred and the gross profit when added together will equal now to 250,000. Meaning our balance of construction in progress at the end of 2011 will be 0 since we are no longer in progress. Okay, lastly, and I think this will be the last thing that will be asked, if ever, will be the progress billing. If we think about the progress billing, it's basically just the receivables from our customer. Since we are the ones who are constructing the building, we are the ones who we are the seller of the contract. So in progress billing, it's the balance of our receivable from our customer. So let's first record the per year. Okay, 2009, 2010, 2011. Oh no. Okay, so in 2009, let's get our eyes here on billings on contract. This is what the progress billing just means. So in 2009, we have 125,000. In 2010, we also have 125. And in 2011 is 0. If we try to observe in 2009 and 2010, we already have a sum of 250,000, which is already equal to our contract price. So let's have the to date since we are asked for the balance. So in 2009, it's 125, and in 2010, it's 250 already. So the question now is in 2011. How much will it be in 2011? Because we have 0 here and we have the to date. The to date in 2011 is 250,000. Again, like in construction in progress, what is asked usually, what is the balance? No, I'll not copy. What is the balance of the progress billings? Okay, the balance in the progress billings in this case will be, do we have collections? We have collections. How much is our collections in this case? We have 120,000 for 2019, we have 120,000 for 2010, and we have 10,000. So the question now is, do we have a balance still? I believe not, because in 2011 it's already the end of the contract. After our closing entry, we will no longer have a balance for our progress billing. Like in construction in progress, we will also have no balance in that case. So these are the things that may be asked in the exam: the progress billing, the construction in progress, the revenue to be recognized, and the gross profit per year. I may also ask for other items such as percentage of completion. So if ever you have questions, just address it to our group chat. But since this is already a review for you, I believe this will be easy to understand already. So again, God bless for the exams on Wednesday, and please Stay at home and stay safe. Goodbye.